Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are poised for a cautiously optimistic start coming in. Trade is expected, however, to be range bound. The GIFT Nifty signals a positive start coming in for Indian indices to an extent of 0.2% out there. Let's talk about Wall Street performance overnight. Ended lower after bank rating cut spark wider sell-off. The Dow Jones Industrial, S&P 500 both fell as much as 0.40% and the Nasdaq Composite too ended lower by 0.80%. Moody's cut rating of 10 US bank and said that there may be more downgrades coming in for larger lenders. It also warned about the banks finding it harder to make money as interest rates remain higher. Let's talk about regional counterparts there. Traded mixed on Wednesday. Talk about FIIs. They continue their selling streak around 9th out session there. They've sold shares to an extent of around 711 odd crore and DIIs have bought shares worth around 537 odd crore. Highest delivery was seen in Tata Consultancy Services, HUL, Infosys, Marico and Pidilite Industries. In terms of earnings that we like to keep an eye out on, Z of course will be reporting in the numbers along with Tata Power Company, Bajaj Consumer Care, Bata India, Berger Paints, and along with that you have names like IRCTC, Kalyan Jewelers and Sula Winas along with Suntex Realty and Trent, which will be focused ahead of the quarterly earnings. In terms of what we have for FNOQs, we've seen buyers, FIIs being buyers in index futures and sellers in index options. They've bought, in index futures to an extent of around 424 crore and have been sellers to an extent of 936 crore when it comes to index options. They've, of course, also been sellers in the stock futures and they've also been buyers in both Bank Nifty futures as well as options for that matter. If you talk about stocks which are currently, in the ban, you would see something in the like of Chambal Fertilizers, which has been added to the list along with Delta Corp. And what has been retained thus far is Balrampur Chini, along with Hindustan Copper and India Bull Housing Finance and India Siemens. Let's discuss some stocks and strategies with Rajesh Palviya, Senior Vice President, Head Technical and Derivatives with Axis Securities out there. Good morning, Rajesh. I'm going to start off by asking you your strategy for the viewers out there. Do you think there is a trend reversal which is taking place for Bank Nifty? If yes, what's the level that they can look at? And also your view coming in for Nifty right now. Do you see a positive setup coming in for Indian equity market?
Good morning, Nickey. So overall setup for both the indices are on the positive side only. But yes, for near-term setup, Nifty is likely to remain in the consolidation range. A lot of call writing activity is happening in the range of 19,600, 19,700 band. So that is likely to act as a major support or supply, a major resistance or supply area for near-term setup. On the downside, 19,500, 19,400s are attracting more put writing activity. So it's going to be range bound for some couple of trading sessions. 19,450 on the downside, 19,750 is on the higher side. So to play this range bound behavior of Nifty, we are initiating here short straddle for strike of 19,600. So by writing call and put for 19,600 strike, you will be pocketing around 128 rupees as a premium for this weekly option expiry. Keep a stop loss of 175 for your premium, and on the downside, once the premium shrinks towards 25 or 30 zone, you can book the profit. As the most of the call writers are aggressive at 19,600, 700, so we are expecting that it's going to remain in the range only for next couple of trading session. But Bank Nifty is looking one notch better compared to the Nifty. In the previous session, we have seen again long built-up activity in the Bank Nifty, and most of the banking stocks have shown good buying interest ahead of RBI policy. So looking at the setup for Bank Nifty, if at all Bank Nifty crosses above 45,200, then one round of short covering we can expect in the near term, and possibly Bank Nifty can scale up to the level of 45,400, 500 zone also. On the downside, 44,700 is likely to act as a good support area for any minor dip comes in the market. So buy and dips is the strategy for Bank Nifty. Keep your stop loss at 44,700.
All right, that's the strategy coming in for both Nifty as well as Bank Nifty, which looks better as compared to Nifty, and a short straddle strategy at 19,600 levels for Nifty. But let's address stocks and news. And we're going to get back again to Rajesh and check with him his assessment on the market along with the 2 recommendations for our viewers out there. And the list that you need to, stocks that need to be on your list includes the like of Idea Forge, Coal India, Siemens, Utkarsh Small Finance Bank, are some of them. Let's address Coal India's numbers first. It's a tad below estimates. Revenue is up by 2.5%, and the number is around 35,983 crore as compared to the estimates of around 35,140 odd crore. EBITDA has taken a hit by as much as 14%, and that also is lower as compared to what the street was working with. Beg your pardon, the number on EBITDA level is higher than what the street was estimating. Coal India reported in the EBITDA at 10,513 crore, whereas the estimate was to an extent of 8,676 odd crore. So overall, if you talk about the operational performance, it's better than what the street was working with. Margins have come in at 29.2% as compared to 34.9%, and the expectation was to an extent of just 25%. So there is a beat coming in on the operational performance and the margin profile of the company, and net profitability, despite taking a hit of around 10%, seems to be still more or less in line with what the consensus was working with. Siemens, on the other hand, a bit of weak set of numbers coming in for that one, weaker than what the street was at least working with. Revenue was up by 14.5%, EBITDA 37.5% uptick, and if we talk about the margins at 11.7% as compared to 9.7%. Overall, if you look at what brokerages have to say, they've maintained the sell rating and the target price of around 3,300 rupees as compared to the level of 3,800 that the stock is currently demanding. They've said that the 10% miss on the EBITDA level comes on weaker execution and also a weaker margin base. Despite that, we're seeing those kind of numbers. Utkarsh Small Finance Bank, well, both these companies are newly listed, Idea Forge along with Utkarsh Small Finance Bank. Disappointing set of numbers here also. NII at 422 odd crore, net profitability at 107 crore, and the NPAs have improved a little bit sequentially thus far. But let's address the markets open. Well, we are looking at somewhat a subdued start coming in for the market. 0.1% of losses coming in for the market. Remains to be seen if there is a trend reversal which takes place. Some amount of caution was sensed from global setup, but GIFT Nifty indicated somewhat a cautiously optimistic start coming for Indian equity markets. But at this point of time, we are seeing profit booking creeping in right at the opening deals, and the market is down below that 19,600 mark. Remains to be seen how strong of a support does 19,600 mark acts, and if there is a bounce back later in the session. Let's talk about Bank Nifty just to see how is that reacting after the slew of downgrades that we've seen across the banking sector in the US by Moody's at least. Nifty Bank, well, we are seeing sharper losses coming in for that index. 0.25% wiped out on this index in early deals. Let's talk about something like a small cap and the mid cap index. We are witnessing selling pressure across the board, at least from the face of it. Before we dive into the small cap performance, well, that's an outlier there. A bit of outperformance coming in, gains to an extent of 0.2% out there. So it's only the small cap index which is showing some amount of strength. IT basket down and out with losses of around 0.5%. And if we talk about the other sectoral indices like FMCG for that matter, they're also witnessing some amount of selling pressure. Pharma, on the other hand, with the slew of upgrades that have come in and the reports by most of these companies have been doing well, the Pharma index is holding bright right now. Let's talk about the Realty Index along with the Metal Counter and PSU banks for that matter, just to see where the traction is moving right now for the markets. Realty Index has also taken a knock, 0.2% lost out in that index. Metal Index, however, is witnessing some amount of upside gains out there. Gains to an extent of 0.25% coming in for that one, and PSU Bank losses to an extent of 0.1% out there. Let's talk about the top gainers and the losers that we have on the list right now, just to see where the market momentum is. Before we address in the advances and declines, 29 advances as compared to 20 declines that we have. Market breadth right now is favoring advances, but let's address the gainers and the losers. Coal India, on back of the reports that have come in, numbers of course which have been a beat on both EBITDA and the margin fronts. You have DRL, NTPC, which is doing well in trade. So all of these stocks right now are the top gainers on the index. Let's talk about the other gainers: Power Grid, Adani Ports and Sun Pharma. These are some of the other gainers that we have on the list, along with ONGC, Bajaj Finserv and Titan for that matter. Let's also talk about the losers that we have early on the list. And that includes the like of something in the likes of rate sensitives, right? ICICI, Maruti Suzuki, along with HUL, down and out in early deals. Apollo Hospital, HCL Tech and Reliance, essentially, that's the drag, where the drag is coming in. You have the financials and RIL. Both of them are dragging the market slower. But coming back to what we were addressing in terms of stocks and news, Utkarsh is started a weak momentum overall sequentially. Asset quality is aided by a write-off. And the drone manufacturer Ida Forge, which listed with 94% of premium. For that company also, the earnings profile doesn't look as pretty. Net profitability down by 54%. Revenue takes a hit by 2.5%. EBITDA also goes down by as much as 48.3%. That's that when it comes to the earning profiles that we have. But in terms of other bit, Adani Enterprises is a big one where the company has decided or let's just say the agency suggests that the company is mulling selling almost $2.7 billion stake in Adani Wilmar. The family will be weighing in keeping the minority stake in Adani Wilmar, and it's going to be focusing on the core business. PB Fintech, it's a new age company where we're seeing some amount of perhaps lack of reaction on back of the earnings, which was a break-even on the EBITDA level. Macquarie has initiated an underperformed rating on this one. It talks about the company being a disruptor, and Bima Sugam platform could be a disruptive and could take away the rates and the market share of the company. And the channel checks right now reveal the regulator wants this to be a UPI moment overall in the industry. Talks about valuation being expensive at almost 48 times FY27 PE. So that's that when you talk about the stock individual performance out there. But let's go back to Rajesh and check with him. What does he make out of something like an ICICI Bank and RIL for that matter? A bit of profit booking right at the early deals, dip below that 19,600 level. Rajesh, what do you make out of it?
So market again not having that much of selling pressure, but it's still yes, it's down around 20 point in the opening. But looking at the overall data setup, we are optimistic that 19,500 is likely to act as a good support area. So nothing to worry as such. Stock specific action is taking place. So that's the theme is playing out at the current juncture. So one should focus on the stocks rather to index for next couple of trading session as we have important event RBI policy lined up. ICICI Bank is taking the support almost near to its important and critical support area of 965, which is very important for the ICICI Bank in this decline. If at all stocks manages to hold this 965 level, then possibly some pullback action we can expect in ICICI Bank. And on the higher side, 985 is the immediate resistance area. Once stock crosses those levels, then this pullback can extend. Bank Nifty is almost trading below to 45,000 level on the Bank Nifty future. So that is important level to watch for in the today's session. So if at all Bank Nifty again manages to recover above 45,000 level, then some buying traction we can see in the second half of the trade. But as of now, structure looks little weak for intraday point of view as we are trading below to 45,000. Possibly Bank Nifty can take a hit towards 44,800 during the day, and then again we have to review around those levels. Reliance, we have seen some recovery in the last couple of trading sessions, but again on the higher side, or 25, 30, 25, 40 are the major supply zone for a stock on the near-term setup. So until the stock not crosses about 25, 40, some consolidation action with the downward bias we can see in the stock prices. But on the lower side, the major support area for Reliance is 2460. Till the stock is holding this level, view is on the buying side. So buy on dips is the strategy in the Reliance with stop loss of 2455.
All right, that's the word coming in for ICICI Bank and Reliance. Perhaps you expect a little bit of bounce back after the 19,600 mark, well below that, beg your pardon, for Nifty right now. Do you see a recovery at the before the RBI monetary policy review? outcome which takes place tomorrow, or you think the trade is expected to be range bound ahead of that?
So my view is looking at data, we expect range-bound behavior for Nifty for next one or two trading session. Post RBI, yes, there could be some post RBI policy. There could be some major move in the Nifty, but till RBI policy, we are expecting range-bound behavior. That's why we have initiated a short straddle strategy in the opening trades.
All right, Rajesh, we're going to let you go on that note. It was indeed a pleasure chatting with you. All right, let's address the fundamental side of the story. Too much to talk about with the downgrade which has taken place for some of the US banks by Moody's out there. A bit of pessimistic sentiment. Perhaps market is just looking for reason to sell and investors take their profits off the table. But to take the discussion forward, we're being joined by Siddhartha Khemka, the head of retail research, broking and distribution at MOFSL. Good morning there, Siddharth. I'm going to start off by asking you about your assessment overall for the markets and the range-bound trade that we're witnessing thus far over the last 2 weeks. 19,600 mark has been taken off. The index is trading well below that level right now. FIIs continue to sell. A bit of pessimism creeping in from the US markets given the news update. We have RBI monetary policy tomorrow. What do you make out of it?
Yeah, very good morning, Nickey. So if you look at the equity market setup, I think on the domestic front, things are pretty stable. It's just that the global markets induced volatility is affecting Indian markets. And as you rightly said, yes, our markets had seen some rally in the last 5 months, consistently gaining. And there was some profit on the table and investors were looking for reasons to take that. And now with the, if you look at what is happening globally, starting with China, where the slowdown is kind of visible, the government there is taking rate cuts, is providing further stimulus so that the growth doesn't slip down again, which is a cause of concern given that the global economy was on a verge of recovery. And then you have what's happening with the US, US rating downgrade, and now further certain banks getting downgraded. We saw some time back where there was some of these small private banks in US facing some liquidity concerns that kind of again impacted the global equity market concerns, whether that could lead to the US Fed into some other action, and that could impact the equity market flows. Having said that, if you look at on the domestic front, valuations, although they're still comfortable at 19.5, 20 times 1 year forward earnings, so not a big concern there. In terms of earnings growth, Q1 has pretty much delivered so far on the aggregate basis with the earnings coming out ahead of estimates mostly. So that also doesn't kind of give some kind of comfort. And the biggest comfort has been that the FI flows over the last 4-5 months have turned positive. Although in August, we have seen last 10-15 trading sessions, they've again turned negative and the profit booking spree has started. So the outlook for the market is that it could consolidate and remain range bound for some time until this global volatility cools down. And then we can see again the second leg of a rally being started on the domestic front.
When do you expect that to take place, if at all?
Sorry, I did not get you.
When do you expect the second leg of the rally to kickstart? Because in the markets which are as range bound and as cautious at this point of time, speaking about rally, when do you expect that the second leg to perhaps take place?
Yeah, so it's very difficult to give the exact timelines right now. Being a fundamental analyst, we don't have those technical levels or protect checkpoints. But I think you should give 1 or 2 more months for this global volatility to settle down. I think that should also augur well in terms of the profit booking in the domestic market, which could happen over the next 15-20 days, and the market could consolidate. But then I think with the management commentaries coming in from the corporates, things are looking pretty good. As I said, earnings growth has been pretty steady. The data that we have based on our earnings estimate for the companies under our coverage, the earnings have grown so far by about 47% versus our expectation of 51%. This is for the 120 companies under our coverage. If you look at the 30 Nifty companies that came out with 33 Nifty companies that came out with results, their numbers have grown, the earnings have grown by 43% compared to our expectation of 41%. Monsoon has so far been good, pretty good. The institutional flows, both DIs and FIs, have been pretty good. The recent global economic outlook, if you see, there also India stands pretty steady in terms of the GDP growth, where India's GDP growth estimates were upgraded while that of China, US, and the world had seen some downgrade. So I think, yes, the stock-specific, sector-specific action will continue. The other major factors has been that companies are benefiting with the fall in raw material prices. So margins have been improving. Price hikes have been taken on back of the previous cost inflation, and that is kind of pushing the margins back to where they were earlier. So all put together, I think the domestic setup looks quite good. But on the index front, having seen the sharp run-up over the last 4-5 months, there is definitely 1 or 2 more months of consolidation ahead of us.
All right, Mr. Khemka, just one question that I have is, what do you think about the new age companies, PB Fintech for that matter? We saw a bit of, underperformance rating coming in by Macquarie there. That's one. And also, what do you make out of one particular sector that has managed to surprise you on the valuation front? Do you think there is some amount of comfort still within that sector?
Yeah, so if you look at the new age fintech companies, I think starting with the March quarter, things started turning around and companies started reporting much better numbers. The margins started improving, and on an adjusted EBITDA basis, they all started turning around. And PB Fintech just turned around this quarter. So the price build-up, or you can say the share price, started building in this turnaround much ahead of the earlier expectation. So be it the Paytm, be it Zomato, be it now the PB Fintech. So we have Paytm and Zomato under coverage. Both of them reported very strong numbers. If you look specifically, Zomato delivered an excellent Q1. It turned profitable. Revenues grew about 17.5% to 24 billion, much ahead of our expectations. So this was led by the food delivery business. And that is where we see that the company has also started hiking the delivery charges, which is aiding the EBITDA margins. Paytm too kind of reported a net loss in line with our expectation. But if you look at the overall revenue, grew almost 40%, healthy growth in GMV, disbursements, and addition of subscriber base. So my view is that yes, some of these stocks are because they are very, very high beta stocks, they kind of see a strong run up in anticipation of the good results. And once the results are announced, there is some kind of profit booking. But we have a very positive outlook on both Paytm and Zomato. Paytm, we have upgraded our target price to 1,000 rupees from a 1-year perspective, while Zomato, we have a target price of 110 from a 1-year perspective.
Sure. I'd also want to ask, last question that I have in mind is in terms of pharma sector. Typically good news coming out of that. The earnings have been decent. You've seen that upgrade. More of the companies getting clearances coming in from US FDA. What do you make out of it? Are you gung-ho on this space right now? Do you find some valuation support from the pharma index overall? How are you looking at it?
Yeah, Nickey, if you look at, I think Pharma, after several quarters of underperformance, has started delivering in terms of earnings. And the earnings have been encouraging, particularly for companies that have exposure to the US generics. For example, Dr. Reddy's, Cipla, Ajanta Pharma. Apart from that, we have seen increased traction for niche products. The base portfolio has witnessed growth. The price erosion, which was a big factor for the underperformance of the last several years, that is now easing off. Companies are now seeing improvement in realization. Margins have improved on back of the fall in raw material prices. And the biggest factor is that the regulatory financial issues are easing off. We are seeing a whole host of approvals, clearances for new products, for plants, and that is helping growth. On the domestic formulation side also, we have seen robust growth in some of the key therapies fueled by new launches, price hikes. The sector now looks poised for a strong recovery in terms of growth. Some of the stocks have moved up sharply in the past few months, and hence maybe you can say that the near-term outlook could be a kind of not much of upside. But still, I think overall, we are very positive on the pharma space. Some of the stocks within that that we like are Sun Pharma, DVs, Dr. Reddy's. These are stocks that we believe could have significant upside from current levels as well.
All right, Siddhartha, we're going to leave it at that. And thank you so much for taking out the time this morning and speaking to us. It was indeed a pleasure chatting with you.
Thank you.
All right, before we let you go, we do have L&T AGM, which will take place today. But why is that so significant? Well, that's because a couple of things there. AM Naik's last address to shareholders as he steps down from a 6-decade-long career. But we have the man himself speak exclusively to Moneycontrol's Rajita Prasad at 10 a.m. live. So don't miss the interview where he gives a look back at his journey at the L&T through the years. Do tune in. And with this, it's a wrap. Thank you so much for tuning in.